Hello, welcome to Franchise Tax Board's YouTube channel. Today we're going to talk about the Voluntary Disclosure Program, referred to as VDP, and how to apply for the program. In this video, we will explain what VDP is, review which entities qualify for this program, the application process, and the review process. We are also going to cover what may happen if an applicant violates an agreement. Lastly, we will provide our contact information. VDP is a program that gives out-of-state businesses who owe back taxes and have not filed California tax returns an opportunity to come forward, file, pay, and avoid penalties. Only qualified entities are eligible to participate in VDP. To qualify, an entity must meet the criteria defined by statute. They must be a corporation, including an S corporation, limited liability company, LLC, trust, or partnership. The entity cannot be organized or exist under the laws of California. This means the entity cannot be registered with the California Secretary of State or have filed California tax returns in previous years. The entity cannot have previously received a demand notice or a request from Franchise Tax Board to file California tax returns. Lastly, the entity cannot maintain or staff a permanent facility in California. Storing materials, goods, or products in a public warehouse pursuant to a public warehouse contract does not constitute maintaining a permanent facility in California. Now let's review the application process. To apply for VDP, you will need to download Form 4925, Application for a Voluntary Disclosure Agreement, from www.ftb.ca.gov. Select Forms at the top of the page, then select Search Online. Next, enter 4925 and select Get Forms. Enter your email address and press Submit. A PDF of the form will be emailed to you. Once you receive the email from FTB containing the form, complete and print the form. You will also need to provide additional information and label it Exhibit A. Exhibit A must contain the following information: state of incorporation or organization for the primary applicant, the primary applicant's line or lines of business, and a description of its business activities inside and outside of California. The tax year the primary applicant began doing business anywhere, the business activity that created California nexus for the primary applicant, and the tax year nexus was created. If the primary applicant is a member of a unitary group in which other members are applying for VDP, provide the applicant's relationships to each other, such as parent, subsidiary, or brother-sister affiliate. The beginning and ending dates of the primary applicant's accounting period, a diagram of the business or investment structure labeling the primary, secondary, tertiary, and quaternary or other tiers, and ownership or interest percentages of each. A summary containing the entity type of each tier, California return types to be filed for each entity, the tax years to be included, and the number of total agreements needed. When completing Part 8, the applicant must complete all fields. If more space is needed, the information can be provided on a separate worksheet or labeled Exhibit B. The applicant must show the last 6 years of federal taxable income if applicable, the California net income, the estimated California tax due, the franchise tax or LLC fee if applicable, and other required information.
The applicant must ensure all requested information is complete and promptly respond to all FTB's inquiries to avoid processing delays. Form 4925, Exhibit A and B should be mailed to the State of California Voluntary Disclosure Program, MS F182, Franchise Tax Board, P.O. Box 1779, Rancho Cordova, California 95741-1779. Upon receiving the application, the Franchise Tax Board will assign a unique ID number to the applicant, send a notice containing the ID and further instructions, and the Voluntary Disclosure Agreement, or VDA, to the requester. The agreement is subject to FTB Board approval. Once the applicant receives the notice and agreement, the applicant must complete, sign, and return the agreement to FTB and file the tax returns requested for a maximum 6-year look-back period and pay the taxes due within 30 days. However, the applicant may request an extension for a maximum of 120 days. If FTB has not received the agreement by the due date, or the applicant fails to furnish the requested information, then the applicant will be denied and receives a denial notice. The applicant may reapply by completing a new FTB 4925 with all documents pertaining to the VDP. Normally, the review process will take between 3 to 4 months. If during the review of the application, FTB finds that the applicant is not qualified or has received a demand for tax return, then FTB will send a disqualification notice. A disqualified applicant may not reapply for VDP. However, they may apply for a filing compliance agreement, or FCA. We will not discuss FCA in this video. However, you can visit the FTB website and search FCA for more information. A VDA will be null and void if the applicant misrepresents material facts, fails to file required tax returns or pay taxes, penalty or interest owed, fails to comply with the installment payment, or fails to begin compliance with the California franchise or income tax laws. VDA is also void if FTB finds that the applicant understated more than 10% of the liabilities of years covered by the agreement. If you have any questions regarding the VDP process, you may email cfevdplliaison@ftb.ca.gov. You may also call 916-845-4476 or 916-845-6500. Our operating hours are from 8 a.m. to 4:30 p.m. Pacific Standard Time. Thank you for your time. We hope you found this information helpful.